What is going on, investors? Hopefully, you guys are having a great day out there. It's time to check into our Airbnb when we look at Airbnb stock today, ticker symbol ABNB. This company reported earnings yesterday, and Wall Street is absolutely loving it. The stock is up over $20 per share, over 11% on shares that were already valued pretty richly, in my opinion, at over $107 billion valuation on this stock. I am recording this as we are going through regular trading hours, so the stock price could bounce around by the time you happen to watch this video. Now, from a technical perspective, we're like Michael Jordan going up for a dunk in the 80s, just flying over people, and we are approaching all-time highs on this one that are up here at about 215 to 220 per share. Tell you what, you pull up a chart of like Nvidia or maybe like Google, and you see what happens when you get above all-time highs. Well, boy, this thing could continue to run, believe it or not. Talk about this from a technical perspective as well. Now, what Wall Street is loving is that their Q3 revenues came in at $2.24 billion. That beat expectations by about $180 million. And we had this massive revenue growth. And when you have a company with, in my opinion, this is a very, very elevated market cap on this one, $107 billion. When we come over here and look at these companies' financials, just for the last 9 months, we've done $4.5 billion worth of revenue, and we've had almost that in cost. Okay, so this is a company that is not making a ton of money, so they absolutely better have strong revenue growth, and that's what we're seeing over at Airbnb, up 67% in the most recent quarter. Now, what I want to show you is their guidance for Q4 is coming in between $1.39 billion and $1.48 billion. Now, you might say, well, that's lower than where they are in Q3, but we have to think about like the seasonality of travel. Most people here, at least in the United States, will have their extended vacations over the summertime when the weather tends to be a little bit nicer. While there is a lot of travel in Q4, it's a lot of times back to your parents' house or back to a grandma's house or something like that, and you might not stay kind of an extended period of time like you might in the summertime. But what I do want to show you is this $1.39 billion to $1.48 billion worth of revenue for Airbnb. We want to compare it to last year. They were sitting at just $859 million worth of revenue in Q4. So Airbnb is set to post an absolute blowout top line revenue growth number again in Q4. So that's good news. We also can compare it to a more normalized Q4 before you had any kind of virus impact travel, which it certainly has over the last year, almost 2 years now, believe it or not. You had $1.1 billion worth of revenue in Q4 over at Airbnb. So they are guiding above or even a more normalized year in 2019. That is fantastic. Now, what I also notice about Airbnb is they're squeezing out more money per booking. Okay, look at 2019. The trend on the average value per night was in that, we'll call it maybe $115 as high as maybe $122 a night. Now look at the last 3 quarters. They're getting over $150, upwards of $160 per night. The hosts on Airbnb are starting to squeeze out more money per night. And I think that is absolutely, when you're talking about Airbnb and the fact that they only take a percentage of these gross bookings, okay? The platform booked $11.9 billion worth of revenue through the platform. But remember that a large percentage of that goes back to the host of those properties. Airbnb happened to take home this $2.237 billion. So the more money they can squeeze out on a reservation side, the better it is for Airbnb. And that trend appears to be in a good direction. Now, speaking of a good direction, man, these numbers are going in a nice direction. I'll show you, I'll walk you through the revenue, the expenses, and I'll walk you all the way down to income before taxes. And this company is starting to turn the corner, and it's looking really nice over at Airbnb. So we've got that revenue growth of 67%, went from $1.34 billion up to this $2.24 billion. Now, what I noticed is here's our cost, here's all our operating cost, here's our product development. Our sales and marketing went up quite a bit. Okay, it went from 113 up to $290 million. But all these other costs went up in about relation to what I would think when when you have 67% revenue growth, everything else went up in relation to that. Take a look at our total costs and expenses, went from $923 million up to, I don't want to say only, but only $1.385 billion. Guess what that did for us? It gave us income from operations over double where we were in the previous period. Okay, we made $418 million off this $1.38 billion. We grew our top line by 67%, but sometimes what you see with certain companies is they blow it all on operations. This company did not do that. Take a look. Our income from operations came in at $851 million. Again, more than double where we were in the previous period. I think what some investors are doing is saying, well, if this company can continue to do that, well, they're going to start printing lots of money down to the bottom line. All things being considered, it was an absolutely fantastic quarter from an operating perspective over at Airbnb. Now, Airbnb has plenty. I mean, we're talking about plenty of cash. I'll be interesting to see what they want to do with this cash. Okay, this is well in excess of about, we'll call that about $8 billion in cash, just shy of that if you don't factor in some restricted cash and maybe some receivables that are coming down the line for Airbnb. They have a lot of cash, and I just showed you that this company is printing an operating profit and a net income profit. I'll be interested to see what they do with this cash, and interesting to see if this company can not suffer the same fate as mega cap tech like Microsoft and Facebook and Google. Those companies can't make major acquisitions because the Justice Department just is simply not going to do it. It doesn't matter if a Democrat or a Republican is in office. It's simply not going to happen with mega cap tech, a mega acquisition. Airbnb, maybe they can make a big acquisition. Maybe they can get into some other areas, okay? Not just experiences and nights at Airbnb. Maybe we can get in other aspects of travel, maybe even other aspects of rental, other aspects of renting things out. I think that could be exciting for shareholders as well over at Airbnb. They do have some long-term debt as well. Nothing really that I would be overly concerned about over at Airbnb from a cash flow perspective. It's a wonderful story. Now, they had some weird stuff on this debt. Okay, they had a loss from an extinguish on debt. They also had a change in fair value of this warrant liability. This really hurt their net income number because I showed you this company was profitable over the last 3 months. It was even profitable over the last 9 months as well. They've had $353 million worth of operating income, but because of some fundraising activities and this big gigantic interest expense of $435 million, they had to pay a ton of money for some kind of fundraising. It just absolutely buried their net income. Okay, their net income went from what I think should be positive if you don't factor in this big interest expense, which I think is likely to be a little bit more of a one-time thing, because you see in the most recent quarter it was only $6.6 million on that interest expense. I think they're starting to work that out. That likely won't be something that will reoccur in future quarters. So take a look at this. When you get to add back in those factors, which I think are going to be a little bit more one-time in nature, this company printed $1.8 billion. This is for 9 months, so another quarter of positive cash flow. Well, you're well over $2 billion, maybe even $2.5 billion worth of cash flow. Well, okay, now this valuation, I'm not going to say it makes sense, but it makes a little more sense, okay, when you factor in that this company's still got strong revenue growth. They've got a lot of cash. They probably can do some acquisitions. They can grow this company through a number of different ways, not just organically, but I think this company can grow through acquisition as well. It could make this valuation of $107 billion make a little bit more sense. Now, what investors, they're making sense of this valuation. I tell you what, just because I'm a little hesitant on this $107 billion valuation doesn't mean anything. What you have to do is listen to the market and look what the market's telling you. It's saying we are loving this stock. It was locked in a big old uptrend, okay? We had the lows marked out here at $130 per share, and it has been on a steady increase since then. Now, what this stock is looking like to me is it's going back to these all-time highs, okay? There is price action here, but there's not a lot of volume, okay? And when you have these stocks that are recently traded, recently IPO'd, it's very hard to predict from a technical level. They often do exactly what Airbnb. Start out down here, go up on initial hype, come all the way back down or a little bit lower than where they IPO'd at, and then go on a run. If it's a good company and it's a company that is making money, is turning a corner, is meeting investors' expectations, well, look, they tend to go back on a run. Look at Coinbase. There's a number of different stocks that have done this exact same kind of formation over the last year. Airbnb and Coinbase probably being the two that I would point to off the top of my head. Well, this stock's probably going to march back, I think, to all-time highs, 215, 220. That's where we'll closely monitor Airbnb, because you could play, say you don't want to be in this one, the valuation doesn't make sense, you don't really want to play it, but you do like making money. I mean, everybody likes making money. Well, you're looking for a 2-candle break, maybe a 1-candle break if you're feeling really aggressive and you want to gamble a little bit, but you're looking for a break above the, I would say, I'd probably mark this out closer to maybe split the difference, maybe $218 per share. I'm looking for a candle breakout. You can buy the top of this candle, put your stop loss back here at 218 and play the run upwards, okay? You can go look at a chart of Microsoft, Nvidia, Google. There's a number of different stocks. I mean, there's a ton of stocks out there where when you break above all-time highs, the sellers just happen to dry up. You also get a little bit of a short squeeze at that time. I'm sure those people, when it breaks to all-time highs, want to start covering the shorts as well. Also, what happens is the short sellers come in here, they say, hey, we're at all-time highs. This is an area where this stock can be rejected. And quite frankly, that's what we're expecting with Airbnb. I would say that's what I would expect, is that this stock will walk all the way back up here to 215, 217. The sellers will step in like they have in the past, and this stock will pull back, and then you can buy it on the pullback, okay? I would expect maybe this gap to fill as well. Remember, we're locked in this uptrend as well, and so any pullback to this uptrend, this would be a big pullback, okay? You'd come up here to 217, and you'd pull back to the 190, 195 range, depending on how fast you did that, would depend on where this line was. But even a pull back to this upward trend line, no big deal with Airbnb. Okay, so either way, this one's actually setting up kind of nice. You can play the breakout above all-time highs, okay, and get a little bit of a short squeeze up here, play the momentum, set a stop loss at the previous highs, which would be 215 to 220 on this one, and then you play the run up on this one. Now, the other way to play it is we play getting rejected up here at the highs and pulling back to our trend line. I would love to pick up this stock back on this trend line, okay? The momentum on the stock would still be positive from a longer term perspective, but you might have some investors sour on this one, and you could pick it up there. And again, we're going to print an absolute fantastic growth rate on our Q4 numbers, and then we roll into next year. Let's all just cross our fingers and hope that this health situation just continues to get better. People can get back to traveling and doing the things that they like with their families, or maybe even on their own, and a stock like Airbnb will likely continue to benefit. That was Airbnb. Hopefully, guys, have a great weekend. Good luck with your investments.